It took 19 years, 100 years ago to drop 50%. It took 4 years to drop 20% in the late 60s and 70s. And then it took 12 years in the 80s. I mean, so, I think, if that discussion, I guess, would need to, there's a lot of factors at play, right? Balance sheets of farmers is one. Alternatives to other investments. Now, I think we're in a really fascinating time right now. I mean, we've gone through this period. Land values they bottomed at 93, and I bought a vehicle, a pickup truck in 94 I got single digits on that interest rate, right? That was the first time in, I don't know how long we had single digits, 20 years in interest rates, right? So we're starting to see bond yields rise. There's a whole lot of things that could happen that could, make other investments more attractive.
Yeah.
My intuition tells me that we're going to see lower grain prices in the future for an extended period of time. And then when I say the future, I don't mean the next 3 months, but 6 to months out or 12 months out, and for a few years. That's going to drive some liquidity or impose some liquidity challenges.
Yeah.
And how sticky can it go? So when we talk about technical analysis, we talk about support and resistance levels. And when we look at this chart, we can see the price came back from the 1968 high and found support at the same level as 1921.
Oh, yeah.
In real dollars. The pullback from the high of 1981 down to 93, that found support at the previous resistance levels, right? The previous support at 73, the previous support in 22. Now, if this was any other asset, I would anticipate a pullback down to the previous high of 1981.
Okay. Test
that previous high. Now, just to give some support to this, you can see this happen on every chart everywhere. My readers would know I talked about this a couple years ago, 2 or 3 years ago, with red lentils and canary seed. Test these previous breakout levels, and I did.
Right.
Probably no one else is charting them. Like the buyers aren't using the charts. I know that much, right?
Right.
So just human nature is the way it happens. I can't explain why it works this way, and when no one's charting it,
Yeah.
So I anticipate a pullback to that 81 levels, and that's a 50% retracement in the price of farmland.
Yeah.
And if we go back all the way down to this other support and resistance level, which is quite a drop, that's 80%, which is hard to imagine.
Yeah. Yeah.
It's too early to talk that.
Even 50 is hard to imagine, Trent, but
it's hard to imagine. Yeah.
I guess when I take a look at the industry right now, financially, I think overall, I think it's pretty healthy, right? I do think there's some issues out there and maybe more brewing. But I think in terms of the creditors and the lenders, they've got a pretty good security margin, right? Like they maybe lent 75% of what the land is worth. So like in my past experience, I kind of found that, while there's that equity in there, land values are going to maybe fall, if they're going to fall, a little bit slower because it's on their dime. But if you go back to the 80s, and once we kind of broke through that level, whether it was 80% or 90%, once you go through that, there really is no bottom. Because now there's no equity, right? And that was really evident in the, financial crisis in the States with the subprime mortgages, right? Everything was 100% mortgaged. And once it started to go down, there was no floor. So I do think if you got through that level, it could keep going.
Yeah. There's nothing to say it can't.
Yeah.
And I honestly believe, just because I'm a technician, that we see a 50%. I think a 60%, but let's talk 50% right now, just because I see it happen in every other asset class of 60% retracement, and then possibly another rally up to higher values. But there's a lot of I don't know how deep you want to get in that rabbit hole today, but
Well, yeah.
but it's
Yeah.
Anyways, it's an area of interest to me right now. Level of interest is
Yeah. Well, and me as well, right? With our business, this is, what we get, paid to do. And, people say, where do you think it's going? Right. And I just talk in probabilities, right? Because I don't know what's going to happen. I just know that there's more buyers than there is sellers, or there's more sellers than there is buyers. If things are going to change, they usually change in September after the harvest is off, right? So, and we have different strategies for different people depending on whether we think it's going down or going up, or all that kind of stuff. So I do see a tremendous amount of strength still in it, Trent. But like you, I'm starting to see a few cracks kind of appear in it. Another really interesting thing is rental rates are jumping, and everybody is, well, why are rental rates going up? Well, do you know what? Rental is a substitute for purchasing. And so now when you take a look at $3,000 an acre land at 6% interest, that's $180 an acre. I think my math is right there. You can rent that for 120. Maybe you should do that. And then short term, and you can renegotiate after 3 years. So we're actually seeing rental rates increase. I think that's really interesting as well.
That is interesting. Yeah. So it signifies to me a strength in the industry.
Yeah.
Which suggests maybe.
Well, instead of purchasing, they still want to expand, right? But instead of purchasing, maybe we're going to do a rental arrangement.
Yeah.
Yeah. We're just going to see what happens in the next 3 years. So.
Yeah. Well, to me, it's just a fascinating time to be alive. I mean, what's going on south of the border and there's a change of the world order happening. It's happening quicker. I think the way we've done business is going to change. I think with interest rates, really interesting to see what happens with bond yields and that, and see where that goes.
So many factors that can affect it, right?